Have you ever wondered how long it will take for your money to double in value? Well, there's a simple rule of thumb that can help you calculate that. It's called the rule of 72. Here's how it works. You take the number 72 and divide it by the annual rate of return on your investment. The result is the number of years it will take for your investment to double in value. This rule of 72 works for any rate of return, whether it's an interest rate on a savings account or the rate of return on a stock or yield on a bond. For example, if you invest in real estate, which has an expected average annual return of 9%, you divide 72 by 9 and get the answer as 8. This means it will take 8 years for your real estate investment to double in value. Likewise, if you invest in equity mutual fund with an average CAGR of 16%, it will take 4.5 years to double in value. But if you invest in a bank FD giving you an annual return of just 5%, it will take approximately 14.5 years to double. However, it's important to keep in mind that rule of 72 is just an estimate, and the actual results may vary based on various factors such as inflation, taxes, and market fluctuations. That's SD for you today. Do share it with someone who would need it.